Hi, everybody. It's Jessica Stone at Stansberry Research, and I'm joined now by Scott Garliss. You know him as the editor of the Stansberry Newswire. And Scott, we're seeing some signs of distinct recovery in Europe, particularly the opening of about 11 countries. They're opening their borders to travel within the European Union. What does that tell us about the trajectory we're on here?
So what that's telling us is the European economy should start to recover even more. Yesterday, these 11 countries, including Germany, Italy, and Spain, three of the largest economies in the region, they held a virtual conference call agreeing to this. And what they're going to do is, starting mid-June, they're going to let European nationals travel within the various countries. What they want to do is revive the summer travel season and the tourism season. Now, why this is important is it's one of the largest parts of the European economy. Tourism accounts for roughly 10.5% of GDP. The number was like 11.7% of employment. So getting that business going again is a big deal.
Does that mean that Americans and Asians will soon be able, and Africans will soon be able to travel to Europe as well?
I would certainly think so. I would think like what we're already seeing there is that these economies have started letting people interact with one another, seeing how it goes. Like Germany started just by letting small businesses open. They gave it 2 weeks. They didn't see a big flare up in coronavirus cases. They started letting larger businesses open. Again, the data has held really stable to easing downward. So as long as they're not seeing these flare ups, they're willing to push the limit a little bit more and see what happens. What's interesting is we had a release out of the South Korean CDC earlier today. And what they were saying was, what they're noticing from tests of people that have been infected previously, there were 470 individuals that had tested positively again. They've now come to realize that might be a testing issue, and that actually they were false positives and they were dead coronavirus cells that were registering. So they're not going to make those people quarantine any longer once they've recovered. That could be a really good thing if that proves to be the case all over the world. That could allow people to interact much more freely.
So what do we think this means then for the free flow of cargo? Because I actually saw that Amazon, for example, just reopened some of its warehouses in France. So that would indicate it's trying to get ready to move product again.
Definitely. I think what will happen is airlines, as they start moving around, they'll be able to ship goods more freely. As airlines open up routes, we saw Delta yesterday came out and said they're going to open up 100 more routes. That's a big deal. What people don't always realize is that the airlines make incremental margin on moving goods while they're flying people from place to place. So as they open up to more cities, that means the more transfer of goods.
Yeah, that could be really good especially for the farmers in Europe, who of course are, I'm sure, facing some of the same things that the American farmers are, with too much product and no place for it to go. More broadly, we are seeing the markets respond to this optimism in Europe, and even the Bundesbank is now measuring the recovery and saying it looks like we are beginning the recovery. What do you think this means for investors? How do we see this play out throughout the balance of the recovery and maybe just the next couple of weeks?
If we see the coronavirus cases don't spike, that means economies can keep opening up everywhere. And the reason why, as U.S. investors, we want to be paying attention to Europe is probably about 2 to 3 weeks ahead of what we're doing here. So if they can do that there's a good chance that governments here are going to keep pushing to open things back up, get the travel industry going here again in the U.S. I would look at companies like Expedia, which has large exposure to European travel. Another company to look at would be William Hill. They're over in the United Kingdom. That's a big travel business. Then I would look at other OTA names here. Those are online travel agencies. Names like, Priceline. Google is big in doing online travel now. These companies should all benefit if travel opens back up. Another couple of names to possibly look at would be names like Hertz and Avis. They've been destroyed by the lack of car rental. If people are traveling from city to city and they're not taking their cars, and they're taking other modes of transport, they're going to have to rent cars when they get there. Because these names have been so beaten up, there's potential you could get a short cover route.
Yeah, I was just going to point out, we did our segment last week on autos, and we know that people are choosing to drive over mass transportation for the illness implications. So if they don't have a car, they are probably more likely to rent one than they would be to take mass transportation under these circumstances. Thanks so much, Scott Garliss, for your perspective on why we should be monitoring Europe very closely, as are the markets. And if you would like to see many more videos just like this, please subscribe to our YouTube channel. You can also find us on Facebook, Instagram, and Twitter. Thanks for watching. That's all for now.